Welcome to Real Talks, where we have real talks with successful entrepreneurs and investors. My name is Zachary Young, and I will be your host for today. And today we have a very special guest with us. His name is Chris Long. He's the co-founder of CryptoKnight Academy. So welcome, Chris.
Hello, Zach. Thanks for having me on.
Yeah, so the purpose of this podcast, right, is that we get to go behind the scenes and really talk and find out more of the mindsets of all these successful entrepreneurs and investors. Because sometimes some of y'all might see them as trainers, as coaches, as speakers, and the things that they say out there is very, very polished. So today we're going to go behind the scenes, find out the very politically incorrect stuff that they think about, their mindsets, what make them successful, and hopefully we also get some gems for all of y'all. All right. So Chris, why don't we get started? Why don't you tell us a little bit about how you got started in this journey of crypto? Because I do know you have a very exciting story of how you turn things around. So maybe you can share with the audience, how did this happen?
Okay, so for myself, how I got started in crypto, the story really began back in school. I was studying a Master's of Applied Finance, and back in school, it's really funny. All I wanted was a stable job in what we call middle office. 9 to 5, go in, get a stable income, buy a house, the standard dreams. And when I was in school, the funny thing is that a lot of people wanted to do this thing called investment banking and fund management. And every time the lecturer asks, what do you guys want to be? Everyone says, oh, I want to be fund management, I want to be investment banking. And the irony is that I've actually never really wanted to be either of these things. But lo and behold, amongst the many students in school, I think eventually the whole cohort, only 2 out of the whole cohort went to investment banking. One is a friend called Wen Ying and myself. So, I don't know how I got in, but I got in. And what I didn't really expect was how difficult the job was. And I used to work from maybe 7 in the morning and we get to go back at 3. Oh. Yeah, 2 to 3. Not PM, 2 to 3 a.m.
Wow.
Yeah,
okay.
So I was lucky. I get to go back at 2 to 3 a.m. My friends at Goldman and all that, they go back at maybe 4 or 5 when there are deals happening especially. Because of that, the work was intense. And I remember there was once where I worked from Mondays to Sundays for about 2 weeks straight. And on the second Sunday, right, after working for 14 days, 14 hours a day. The presentation was the next day and it was about 12 a.m. I messaged my boss. I said, here's my deck. Here's my pitch deck. I'm going to go home. And he said, Chris, you are not allowed to go home until I have read the deck, told you the changes that one made, then you are allowed to go home. And mind you, I was 30, right? In early 30s by then. Ever since secondary school, no one has told me you are not allowed to go here or you're not allowed to go there. Only my mom said you're not allowed to go Orchard Road because you're only 13. So it's been a long time since someone had that kind of power over me. And I stayed. Even though I was dog tired, I stayed, made the changes he wanted. But that was kind of like a turning point because I remember while waiting for him, I went downstairs to the ground floor and I saw a few people skateboarding. Right? They were just skateboarding. It was a Sunday. And I thought to myself, wow, here I am, investment banker, the job that my whole cohort of Masters of Finance students, they want to have this job. And here I am, I have it. I should be feeling lucky, but I don't. I feel like I am trapped. And these people who are skateboarding, they may not earn as much as me. They may not have as great a career future as me. But they had the freedom to be downstairs skateboarding while I was stuck upstairs waiting for my boss to release me. So I think it was a turning point. I think that at that point, I didn't want to be trapped in this rat race. When I look at my bosses in their 40s and 50s, sure, they go back a bit earlier than me. Instead of 3 a.m., they go back at 1 a.m. And then the CEO goes back at 11 p.m. I was like, do I want to live the rest of my life this way? And I thought, no. So from there, I started to look for alternatives. Thanks for bearing with the long story.
No, it's very exciting. I'm picturing all the people, you going down, seeing the people skateboarding at Raffles Place, right? I'm assuming.
Correct.
Yeah.
Yeah, and I was sitting there just watching them. And I thought, wow, this is not what I want lah.
I see.
And I started to look for great investment opportunities. I wanted to invest my money, get out. And I came across the Bitcoin white paper, read about it, and I thought, hey, this is interesting. And I went down the rabbit hole from there. So started investing in crypto. did well, started teaching my friends, eventually founded CryptoKnight Academy.
I see. I think one
Yeah.
very interesting question I have is that, even bankers right now, I mean, I always categorize them as the TradFi, the traditional finance people. And generally, they are not very open to crypto, digital assets, this kind of thing. Recently, more so. But even right now, people from the investing background and banking, they are very closed off to it. But yet you, from an investment banker, went into crypto. Like, what made you so open to make the leap? What is your thinking behind that?
Yeah, I don't want to be a banker.
Yeah, but like people don't want to be banker. Maybe they'll go join real estate. Those kind of very known kind of thing. But at that point of time, and that time was what, 2017,
2017,
yeah. So that time, crypto is seen as a scam, So your thinking was, I think you went into something that is very ahead of its time. So I was just very curious, what made you do that?
I mean, the frustration aside from being in banking,
but the openness to crypto, because even right now we try to convince some of our investment banking friends or some of our people working in the finance, like, hey, you should buy Bitcoin. The pushback is real, man. It's like,
is it?
Yeah, it's like, hey, this is a scam. This is
to be honest, no one ever pushed me.
None
back
for you?
None for me.
Okay.
None
So
for
it was quite a smooth journey for you into that.
Yeah, no lah. I mean, somewhere through the middle of the journey, I remember my father-in-law said something like, hey, Bitcoin is like musical chairs or something. But basically, musical chairs of finance. But I think they are good questions. And I guess my mindset is at the crux of it. I always try to think, what is the crux of it? And this theory of musical chairs, it just occurs to me that it's the same for all financial assets. Like, let's talk about property in Singapore. Is it not musical chairs? You buy in the hope that someone would buy it from you higher down the road. Gold, you want to buy it because somewhere down the road, someone will buy it from you higher. It protects your wealth. But why a property and why gold? Do we really need such a big place to stay? Is a shiny piece of metal really valuable in our lives? Does it have all kind of use cases, etc.? Answer is no, right? It is a collective belief, a system that people subscribe to, that gold eventually holds value, or Singapore property always goes up. And the collective belief of a people produces the result. So I think when I look at Bitcoin and Ethereum, I was kind of asking myself, does the collective belief of a people exist? And will this collective belief continue to expand and grow? And I thought, yeah, I think so. Why don't we try? Let's take some risk and go with it lah. I guess some people might call it a gambling mentality. I guess it depends on how you define as a gambling mentality. Some people feel that it's gambling, but I'm not sure if I 100% agree, nor do I 100% disagree. The concept of gambling is that you take risk. But I think why gambling is not good is because people cannot control their emotions. And they are addicted to that feeling of potentially getting a huge payout. And that addiction makes them a slave to that emotion. But when you think about investing or in crypto, right, if you are in control, then you're aware that, okay, I know that this might go down, but I think that it might go up because of a collective belief system. Thus, let's take a risk and let's gamble and see if I'm right. So I kind of see it a little bit different. I do see it as a bet, but I see it as a bet on my thinking.
Your thesis. I always
It's
hear
a
that.
bet on my thesis.
Yeah, I always hear that
thesis.
crypto people have this thesis. There's this underlying theory or thesis of what things might pan out, and then of course they position themselves accordingly.
Yeah, so it's my bet. I might be wrong.
But I think your bet has
It's
paid
my
off.
money lah.
Yeah, it has paid off 7-8 years down the road. But I think one thing I want to dive in a little bit deeper is your view on risk, because I think successful people, right, the way they approach risk is very different from usual people. Usual people will escape risk, avoid risk, right? But most of the successful people I know, they kind of manage the risk, or they view risk very differently. Right? Because to them, risk gives you the chance of the reward. So what is your views on risk, or how do you approach risk? What's your approach to it?
I mean, it's standard lah. High risk, high return, low risk, low return. The thing that's not standard is that I think there's like a optimal. It's like a curve. If you take too little risk, you are actually losing money. But if you're taking too much risk at the end, it's like a bell curve. If you're at the two extremes, right, you basically lose money.
Okay, what do you mean by that?
For example, if you have Sing dollar and if you're putting it in a deposit, or let's say you're the super risk averse, you're putting it under the pillow in your room. So you feel that you will never lose money. But actually, when it does happen, you lose a lot more. So let me explain a little bit. So for example, you have money under your bed. Let me ask you a question. What do you think the risk is when you put money under your pillow? How can you lose money?
House catch on fire, inflation.
Yeah.
Probably this.
Exactly.
Yeah.
So a lot of people think that the only way they will never lose money because no one will steal the money. Their house never catches fire. Most people don't think about inflation. So actually at the low end of the risk curve, right, you are losing more money in more ways than maybe even the middle at the high end. Because if your house catches fire, it is a everything loss proposition.
Okay.
You don't lose 10%. You don't lose 20%. You lose everything. Whereas if you have it in a stock, sure, there's a volatility. Maybe it goes up 20%, but it goes down 20% as well. But you never ever lose everything, especially if you do like diversified investment into ETFs, for example, even gold. You will never lose everything versus you putting money under your pillow at home.
Okay. Take too little risk will lose a lot of money also.
When you take very little risk, you're actually taking a lot of risk, which is a concept people cannot understand.
Okay.
You think buying a bond is super safe or putting it in the bank is super safe, but because you think it's super safe, when shit hits the fan, you cannot react and you cannot get it out. Everyone thinks that DBS will never fail, but you never know. Nothing is forever, right? If Malaysia or Indonesia invade Singapore and conquers us, who cares that you have DBS, money in DBS and Sing dollar in DBS is worth nothing.
Okay.
But you are not prepared for that scenario. Whereas if you have it in an international company, let's say Interactive Brokers, and you're overseas, there's a good chance that even if Singapore is invaded, you run away to Thailand, you can still somehow get the money out. Versus having money in DBS. Okay. See what I'm trying to say?
Okay, interesting.
So people usually don't think about that.
Okay.
Yeah.
Okay, so that part you covered the part where if you take too little risk, you're actually losing money. Then the opposite end, where you take too much risk, you're also losing money. That would be a gambling portion already, what do you say?
I think the opposite.
Because most people will think buying crypto, buying Bitcoin, Ethereum, that is the taking a lot of risk, too much risk. Most people will put that at that angle, you see.
Yeah, I mean, I don't really know what taking too much risk is, but I think when you think about the opposite spectrum of too much risk, right? Because I'm a naturally risk-averse person, I never enter into the zone where I want to take that much risk. Even if I put in something really risky, I always have like a backup plan to the backup plan. So it's hard for me to really relate to people who take too much risk. But I assume people who take too much risk are mainly because they are unaware of the reward. And it's not a matter of taking too much risk, but it's a matter of taking too much risk that doesn't offer a similar potential payout.
Okay. It's very interesting because you describe yourself as a risk-adverse person, yet you're probably investing in one of the riskiest assets in most people's eyes. And then you were saying that you have a backup plan to your backup plan, Can you explain a little bit on that?
I mean, why I invest in crypto, at the start, it was a little bit like I want to get out of investment banking. But as I dive a little bit deeper into it, right, and try to align it with my thought processes, I think one of the things that why I would want to invest and continue hold crypto is, what if there's like a world war, and what if gold suddenly don't have any more value, or what if dollar doesn't have any more value? So crypto becomes a hedge or a potential protection against it. So I realized that even though I take risk in crypto, it's actually due to a risk-adverse, risk mitigating type of personality.
Okay.
It's like an apocalypse. I think you mentioned it before, even for yourself. Apocalypse and Armageddon scenario. And you just like kind of need to allocate it based on your own personality. Obviously, we don't go all in crypto because it might go both directions, right?
Yeah.
So but I find that what I do have a certain percentage and still desire to hold a certain percentage in crypto is because of protection or protecting myself.
I see.
So I think that's kind of like the mindset behind it.
I see. Yeah, I mean, I totally understand what you mean, because like what I mentioned to Chris before, to the viewers, if they are not familiar, is that I had this Armageddon portfolio where it has gold inside, silver, it has crypto as well. And I realized that for me, my thesis or my conviction got much stronger when I saw Ukraine being attacked by Russia. Then I was like, wow, if Singapore get attacked, Singapore dollar hard to shift. I cannot go DBS, withdraw the money. So I realized that, actually, when all the Ukraine people flee to the other European countries, the Bitcoin was the way they can do transactions. So yeah, I kind of understand where you're coming from.
Yeah, I mean, you can't bring your property with you, right?
Yes.
You go overseas, Sing dollar. If Singapore is conquered, what's the point of having Sing dollar?
Yeah. This is a very interesting mindset. But okay, I see where you're coming from.
Well, like, why not? Like, if you have 20% of your wealth in crypto, and at the worst, you always have a 20% to restart.
Okay.
And plus, you have the potential upside. Maybe it goes up in price. Maybe it becomes more accepted. So why not? I don't understand. It is logical to me.
I see.
Yeah.
I see. So Chris, I think in your crypto journey, right, there's many ups and downs. I mean, since you've been here around in the crypto space since 2016, 2017, right? Since then, there was a lot of bull runs. There was quite a number of winter as well. I think you also got share like how you almost didn't make it through one of the winters or something like that. I thought that story was quite inspirational. So maybe you can share with us like, hey, what happened and how do you go through it and what were you thinking when that happened?
I started in 2016, 2017, right? By 2018, I had gotten my first 1,500% return. So I think about 12K, I can't remember the exact. It became 150, 160,000 in less than a year. So I thought I'd be a millionaire by 2018, but markets crashed. So I thought, okay, never mind. Let's restart. Let's DCA. Let's continue to accumulate. And you'll go up, I think. But it was a long journey, 2018 all the way to 2022. Right, so about 2 years. During that time, I had left my job and started the academy already, and it was fully all in crypto lah. Basically, business don't do well, I don't get paid. A lot of people think that I got rich because of training, but during those times, really, there are days and months that I only draw maybe 2,000, 3,000 a month, and that is a drop in the ocean compared to, not a drop lah, but a slice of comparison to what I had in IB. And I actually pivoted a little bit. So I started to invest in REITs as well. So I remember REITs was doing way better than crypto. And by about 2020, I think, my wife gave me some money. My kid was born. I had some ang paos for my kid. My parents gave me some money. I invested in REITs for them. And then COVID hit. So I remember COVID hit in China. I was telling Ethan, my co-founder, that REITs and property in Singapore are so strong. Look at this disease, epidemic, pandemic that's happening in China. Stock market is crashing. Singapore REITs are safe. I really ate my words. I remember my REITs, a person who taught me REITs investing said, for REITs to fall by 40% more is a 2 sigma event. It has happened only once in the last 75 years. So I thought, safe lah. 1.5 leverage, as taught by my REITs instructor. 75-year once, I should not be so unlucky. But COVID hit and I was the unlucky person. So REITs fell, cost is leveraged, everything fell even more. And because I had my parents' money and my wife's money, right, I didn't want them to lose money. So what I did is I covered their losses. Sold everything, used my own funds and covered it. And I still remember during that time, I hit a milestone of 200,000 in total assets. I was in my mid-30s. But because of this, right, I sold everything, covered their losses, and I think I went back down to 4 figures. That means less than 10K. So it was quite a sad season in my life lah. Kid just born, business not doing well. The master classes only have one person turn up. I have a whole room. 50 people can sit, but one person sit. So I spoke to that one person. But my highest conversion ever, 100% conversion of the room. And I had less than 10,000. After working for almost 10 years, 35 lah, I think around that time. 35 years old with a 4-digit. My friends were doing well. In your mid-30s, they were accomplished already lah. Some of them have their condos, etc. So I thought maybe I should give up teaching crypto and do real estate, right? And I went to take the test. But I felt bad to sell my crypto after I taught so many people about it. So I decided to sell everything except for crypto. And it was really right smack at the darkest before dawn because after that 2020 midway, there's something called decentralized finance that came about, DeFi summer. So that year was amazing. I mean, from 8,000, I think I reached a peak of about 8 million. So 1,000 times increase within a year. And that round, I told myself, I must take profit. So I did and took profits. Markets crashed, and then I did one more round.
Nice. I hear this story many times, but every time I hear, I still get very inspired by it. I think it just shows people what is possible. But a lot of people see you at, like, wow, now multi-millionaire. But then, wow, there was a point of time where you had like 4 digits. So I think
at 35.
At 35. Yeah, that one is like, wow, even when I hear it, I'm like, wow, that's super scary. So I think, but one of the things I remember when talking to you as you made your millions and you started growing, I remember it wasn't that long ago where we had a meal, like celebrate like your first 1 meal or something like that. We all get together.
Wow, I don't even remember.
There was this meal.
My first 1 meal.
Like we're like, oh yes, finally got that thing. But then what happened after that? You really grew very, very fast. So I think I had another conversation with you. I was asking you, usually after 1 meal, right? So people will play a bit defensive. But what happens was that your approach to it was very different. After your first meal. I think what you do with your first meal and what you do with your second meal is very different from what most people do after they hit their first million. Why didn't you like 1 meal, then, start defending, put in fixed D?
Yeah.
And I believe that was one of the reasons why you managed to accelerate even faster. Can you share with us your top pattern on that?
So you're talking about a mental framework for portfolio
but I think more than just mental framework, because even with 1 meal, someone will have played defensive, but I realized that you were still hungry and aggressive and kind of, rapidly expanding, which is why, your 1 meal, your 2 meal became more and more and more. So yeah, what is your mental model on that, or what was your top pattern on that?
So, okay, let's talk about the journey of wealth. I think the slowest and the most difficult for most people, right, is reaching their first 200,000 or even their first 100,000. I think once you got your first 100,000, it gets a little bit easier. So before you hit 100,000, I think most people should work on their active income rather than their passive income. Because a lot of people, they don't have 100K, but maybe they want to learn trading, or maybe they want to learn crypto investing, etc., which is still okay. I think it's fine. But I mean, if you have $5,000 in your savings, who cares that you can make 10% a month in crypto or in trading, right? Some people might say, learn trading, you can get a shout out to my friends, a daily income, a weekly income. I'm like, $5,000, how much daily income can you make? $50? 1%? Or maybe like 10% a month, even if it's 10% a month, right? In 1 year, you make a grand total of $6,000. And achieving 10% a month is insanely good. Insane. I highly doubt that a lot of people, in fact, most people, 99.9% cannot do 10% a month. But let's say you can. 120% a year. You make $6,000. I go and do Grab 1 month, I can make $6,000 already. So people have this weird decision-making process where they go for optics rather than function. If I had 5,000 in savings, I will go and drive Grab to save money, build up my capital, and make the journey to 100K. I think that one of my friends told me this before. The first 1 to 200K is possible, but not easy for everyone. But what people really struggle with, right, is hitting $2 million. So I remember me and my friends, we have this, they're about my age, a few years younger than me. We have this deal where we say, once we hit 500K, was it 500K or 200K? Sorry, not even 500K, I think 200K, right? We will go and celebrate already. So I remember the time when I brought my 2 friends to celebrate 200K, and then I bought them omakase. Feels like so long ago. One of my friends said the difficulty for Singaporeans is not 200K. A lot of Singaporeans can do it. But a lot of people get stuck because they can never break the $2 million barrier. She said it lah. Wow.
Target set for you.
The moment she said it, right, wow, it burned in my brain and it locked into my heart. $2 million, I will do it. It's sort of like, okay, most Singaporeans will never be able to achieve it. I love that kind of competitive lah. But I think it's true. I think that most people will find hitting 2 million difficult. Net assets lah. Cause I think even if you earn 5K, 10K a month, 2 million you need to work for 15, 20 years, assuming that you spend nothing. Not the easiest for Singaporeans. But I think once you get past 200K, right, then it shifts. 5K, 10K, you learn investing and trading is pointless. 100, 200K, if you don't learn investing, it will be impossible for you. Very, very difficult for you to hit your 2 million. Very, very little percentage of people will hit 2 million without learning some form of trading or investing or business building.
Then from 2 million onwards, what happened there? Just rinse and repeat or?
So I think your mindset kind of changes from 100,000, 500,000, 1 million and 2 million. Then the jump very weirdly goes directly to like 10 million. Because if you're in between 3, 4, 5, 6 million, you kind of feel the same. But I think once you hit 10 million, emotionally you feel a little bit different. And then after that, you'll be aiming for 20, 30 million already. So the multiple actually jumps by a lot. I think that at 2 million, right, there just wasn't, for me personally, there wasn't a desire to stop because I feel like my family has gone past that already lah. Because my parents, they are the property generation and they did well in property. And because I respect them a lot, a lot of people complain and blame their parents. But for me, I see my parents as a benchmark for me to hit. So I think it just makes me think like for me to catch up to them, it's very difficult for me to use property lah. I think right now the market's a bit slower compared to the past. And I really wanted to catch up. So it was just that kind of thought that makes me feel like, okay, if I want to be worth 10 million, I need to take more risk and I need to be exposed to the risk.
I see.
Which is why I continue to stay connected to crypto. I try to find that point where I'm not putting in 500,000 in altcoins, that kind of thing. But maybe I feel more confident in big caps. So I'm mostly just stay exposed to big cap crypto like Bitcoin, Ethereum most of the time. And then for the smaller altcoins or DeFi or trading, I would deploy what I call satellites or mini rockets or tactical plays, smaller tactical methods to do those things to enhance and speed up my main portfolio. So that's how I kind of work it out in my mind. It's difficult lah, right? Because at some point, if you don't have 2 to 3 million, you cannot imagine the life at 2 to 3 million. It was very difficult for me when I had 200K to think about what it was like at 2 to 3 million. And whether or not I'll be satisfied, whether or not I would be contented, whether or not I want to stop, risk on and risk off. I when I was young, I thought 1.5 to 2 million, I risk off, close shop. But once I hit it, I'll be like, oh, maybe I can go further.
Yeah, I mean, that's what I see a lot of successful people also went through this journey. Like a lot of people think like, oh, if I have 1, 2 million, 3 million, I close shop already. But then after a while, then I also start to realize that, hey, all the richest people in the world are still working, right? Elon Musk, Jeff Bezos. So yeah, I realized that there's this drive or something that always push them to achieve more lah.
Yeah, different people have different drives lah. Guys like Elon Musk, they are driven by purpose, right? Send humanity to Mars. But I think for a lot of more, I would say the normal people, not that it's healthy, but their drive is really asset building lah. So I think if you think about it as asset building, right, we think of it as like a game lah. So if let's say you hit 2 million already, a lot of people think, I need to all in, invest everything, or I need to all out, take out everything. But why not think of it as a game where when you play the game, you have like a restart point. So when I had about 2 million, I thought, okay, I'm going to take some off from crypto, which might go to zero, and I'll put 200K into REITs. I mean, it's still safe lah, REITs or traditional assets. So that if crypto dies, I don't start from zero. I start from 200K. Okay. Then when it's 400K,
like
when
a safe point.
when it's 4 million, then maybe I'll take out 800K.
Okay.
Then I will have 800K plus my original 200K. I'll have 1 million in non-crypto stuff, 3 million in crypto. If crypto dies, what happens?
You still got your...
I'll start again. I'll still be a millionaire, but at least I don't start from zero.
I see.
So sometimes I think when you fall too high from the top, it then gets very hard to restart. If you tell me today I restart from zero again, wow, I find it very difficult lah.
I see.
And if someone say, oh, what will you do if you were to restart at zero? Then I think to myself, but I cannot, because number one, I'm older, I have a family, and I will never go back to zero already. I've already prepared myself such that I will not go back to zero. Highly unlikely.
Wow.
So why spend mental energy thinking about this? I should spend mental energy thinking about, what if I go back to 3 million?
Okay.
How would I play 3 million from there?
I see.
Yeah,
This
so
is your backup of your backup example.
So it's a journey lah, right? Once you hit a certain milestone, you want to save. You know, you
save
have
point,
a
like-
save
like game
point.
like that lah.
Yeah, I want to restart here, I'll restart here. You don't want to play all the way from the beginning again.
Oh, wow.
So I think that's how it's like on the way up. If it's on the way down, it just basically means that you're still at stage 1 lah. You still don't know how to win the game at stage 1 yet. So yeah, if you're listening to this and you're thinking, oh, you know, what should I do at stage 10? I think our focus should be, what should you do at stage 1 first? Don't think too far into the future.
Okay.
Yeah.
Now that your lifestyle, of course, has improved and things like that, and tremendously, yeah. But I think one thing I always chit chat with you about is like what to buy or how to spend the money, right? And the thing is that, but you do have a very good framework or a kind of thing to direct you whether to spend money on something or not. Can you share that with the audience as well?
Yeah, so it's also personality lah, I think. And you never say never, right?
Okay.
When I was young, I thought, okay, if I hit 15K a month, then salary, then I'll buy myself a Rolex, which is about 15K. So there was once where I hit 15K from the business lah, a few years back. And I was like, oh yeah, wow, I hit my goal already. It's time to buy a watch now. But when I actually went down to buy it, I'm like, I just couldn't bear to spend $15,000 on a watch. Unlike yourself. Hey. So I couldn't bear it. And I just keep rationalizing or explaining to myself, it's like a milestone, it's a 纪念品. Is that what they call it? A memento or something. But in the end, I just don't have a very strong urge to do it. Even today, we have hit multiple 15K months in terms of salary. I still don't really have the impetus to do it. But it's a very funny feeling. It's kind of like, I wouldn't do it. I think I wouldn't do it. But every time I walk past the Rolex shop, I'll go in and have a look.
No, but the thing is, you do spend on different things. Like you spend on like business class trips, the comfort, you know, you have a model like if it saves you time or comfort, you will.
So there's two things that I will splurge on.
Okay.
Number one, if it saves me time.
Okay.
Number two, if it gives me comfort.
Okay.
So for example, business class.
Okay.
Based on my income and asset, if I do a business class, let's say it's less than 1% of my income, of my asset. I'll spend it on the business class because I'm thinking, okay, anyway, the worst case scenario, the risk-free rate or the bond rate is about 4 to 5%.
Okay.
So if I spend 1% on my business class trip, I can take 5 business class trips without eating into my capital technically. So that makes it thus worthwhile and it gives me a lot of comfort. And it gives a lot of happiness.
Okay.
So I think if it gives me comfort, yes. It saves me time as well, which sometimes the people around me drive me a bit nuts from this. One scenario was I remember someone in my family, my wife, wants to eat popiah. So I said, okay, we order Grab lah. And she said, oh, but Grab is $4 delivery fee and the popiah is $4. It's just nearby, let's drive to get it. And I didn't want to. And she got upset at me. And then in the end, I still drove lah. Wife wins.
Okay.
But it's illogical to me because it takes me 15 minutes to drive there, 10 minutes to drive there, 10 minutes to drive back, and 10 minutes waiting for you. So that's 30 minutes. For 30 minutes, I am saving for myself $4. $4 multiplied by 2 is $8 per hour. And to her, she saved $4.
Yeah.
But it is not entirely free. It is, she didn't save $4. Somebody spent money and that somebody was me. Because I gave up 30 minutes of my life just for her to save $4 and for her to be happy lah, which is okay. It's totally fine. You know, I love my wife. It's not for the $4. It's for her happiness.
Yes.
But when you think about it, right, it's $8 per hour. Managers, staffs, volunteer staff is getting paid 10 times more than me. I think maybe they're doing like $40 or $80 an hour, perhaps in some events. So really, when I do 30 minutes of this, right, she saved $4, but it actually might be costing me hundreds or maybe even thousands of dollars, because in that 30 minutes, I could be doing something productive. Or even if I'm not doing productive, right? Her argument is that, but you're not doing anything productive. But it is still my time that I could be doing something I want. So in a way, if my time is valued at, let's say, $1,000 an hour, just for example, I'm actually spending $500 to get that popiah. So I think that's how I look at things, which is why I feel that between, let's say, 2 flight tickets, one gives me an additional 3 hours, right? Or it saves me 3 hours, but it costs $300 more. If I had my way, I will spend it. Because whether or not you will spend the money depends on how you value your time. If 3 hours is worth $300 to you and more, then you will just spend the money. And 3 hours is worth a lot more than $300 for me. Yeah. And the happiness of business class, you must try if you never tried before. Like seriously, the 8 hours or 10 hours or 15 hours flight, the fact that you can go on early. I remember I just went to China and we had 2 buses that goes to the plane. One is the everyone bus and the behind is like the business class bus. The everyone bus reached earlier. Everyone stood up and wanted to go up. But they purposely never opened the bus door so that the business class smaller bus open first, go up first, then they let everyone come out. I know it's a cheap thrill. I know it's like, oh, you're like higher than me and all. But I mean, it's just kind of like the feeling of you can sit longer, you're more comfortable, more leg room. When you're there, you're refreshed and ready to go. So
comfort and time.
I mean, I think that's why I splurge on.
I see.
But once again, never say never. I never know. I say I won't buy a Ferrari or Rolex, but I never know tomorrow. It's not like I make a commitment or try to impress you guys with my savings.
Those are not comfortable, neither does it save time.
Yeah, but sometimes, it's my money. I can decide what I want to do with it. It's my time. I decide what to do with it. Even if I want to waste it, it's my prerogative to do it.
I see.
Yeah, but business class, we are going overseas, right? At the end of the year. I wanted to do business class, but my CEO of my company said that cannot because we need to sit together with everyone. Team bonding. So for that, okay, fine. Team bonding above comfort. That one I accept.
Like wife happiness above
happiness above logic. Yeah. That one I accept also.
Okay.
Not too happy about it, but I accept. Yeah.
Okay. So I heard that there was a moment where your baby was crying and then you made quite a costly mistake in crypto, right? Can you tell us more about it?
Yeah. So that was in 2020 where it was DeFi summer. We had this thing called yield farming where you will put money into a protocol and it generates for you anywhere between 30 to 50%, even a few 100% of APY, which is an annual percentage yield. And there was once where one of my protocols, the percentage dropped from 25 to 15. And I wanted to shift the protocol from protocol A to protocol B. But my baby started to cry. And I didn't want my wife to be awoken because of it. So I was carrying my baby. Then I went to the study room and I was doing the transactions, baby one hand and typing one hand. So because of that, I actually typed the wrong alphabet in one of the URLs and it directed me to a phishing site. So because I was distracted, I didn't check, I actually clicked send. Then after that, I saw the money transfer and I was like, hey, how come it didn't turn up in my wallet? And that was where I realized, oh, this is a phishing site. So from there, it was about 100K. I tried all means to get it back, whether it is through calling the police or Interpol. But there was no way to get it back, basically. And because of that, because of one alphabet, I lost 100,000.
Oh,
yeah.
Big lesson.
Yeah, it's a very big lesson. So the lesson learned is don't ever do crypto transactions or any transactions when you are distracted.
This is 100K USD?
100K USD.
Wow.
During the time, it was a lot because my whole portfolio was maybe about $500,000 only. So it represents 20%.
Wow.
Yeah.
Okay. Big mistake. If you could give one piece of advice to someone who's still on the fence on crypto, what would it be?
I would ask them, what if the world ends tomorrow and Singapore gets invaded? What would they do? Where is their money and how will they restart? With that in mind, I'll leave for you to think, is it worthwhile to just learn how to maybe be able to park some of your assets in crypto, right? The alternative is gold lah, which also works lah. So up to you. But then you see, gold, you are just really pure asset play. There's no upside or tech upside to it. So I find that crypto has like this technology potential with ease of transport, with SOV, store of value potential. So I mean, that's my, just learn about it lah. That's my advice about to someone who's new. Then from there, y'all can decide.
Okay, so we talk some more interesting and more politically incorrect stuff. Okay, so as you come across teaching students, right? Sometimes the things we share with students, I mean, the students, they also frustrate us, lah. Their way of thinking is very different. So,
or rather, their way of thinking is all the same.
Oh yeah.
So, it's all the same, not very different.
So I do believe that the successful people, their thinking is very different, and then the not so successful people, they have some mindsets or some things that actually hold them back. Okay. So sometimes sometimes out of frustration, in the crypto world, they're always HFSP, right? Which is why they don't think properly, or they don't think well. If you don't know what is it, go search for it, okay? But basically, they don't think in that how a successful person think, and that's why they get stuck in that season. Can you share with us, like, what are some of these commonly mindsets that's not helpful for the students or not helpful for people, and which is why they continue to not be successful?
Yeah, I mean, mindset or perception is everything lah. From young to old, your mindset has actually been shaped by people around you. And if unfortunately you're surrounded by poor or not so successful people, of course success is defined differently by different people, but if you are generally around people that you feel are unsuccessful, your perception will be affected, influenced, and formed by them. And really, if you think that the people around you are unsuccessful and you're really happy, right? Really, the honest thing you should do is change lah, right? Like if you're in a company, and even if the company is like really famous, but you're inside, you're frustrated. You're frustrated with the decisions that they make, with the mindsets and the concepts and the behavior and the culture that the company has, then it's insanity to stay there, lah, right? Even if it is paying your bills. There's this quote that kind of helps me a lot, which I hope it helps you. If you're boarding a plane and you paid the ticket already, and you're at the boarding gate, and you know that that plane is going to crash, would you still go up the plane?
No lah, right?
Logically, a lot of people might say no.
Okay.
But when they are actually in that situation, they always go because they have already paid for the ticket.
Okay.
Right? And I'll give you some great examples. If, for example, you have already invested 100K into this company and you kind of feel like, wow, this company is going to shit. A lot of people will just hold on and wait for the day it recovers. Same as crypto as well. Or if you have an old mindset and this mindset is not helping you, rather than change your mindset, a lot of people will choose to hold on to it, right? And they will just like keep being stuck. I think we see this a lot where some people will say, oh, do you want to be right? Or do you want to be rich? And I think that is a very true concept, because people are worried about investing because they feel that, market's overheated, the world's a messy place, like there's all these things that's happening, conflict that's happening all over the world, and thus, I don't want to go in. I got a really good story is that I have a relative, right, who is actually in the property education business. Basically a lecturer lah, right? Like in a legit university, teaching about real estate, etc., valuation, etc. He's really smart. He's a brilliant guy. Really smart. Asking about interest rates. He have all kinds of theories, and he always challenges me on crypto. And he's academically smart and academically correct. But even though he's in this teaching of real estate, right, he doesn't even own a HDB because he feels that property prices are overvalued. And he feels that it has been overvalued since 2-3 decades ago. Okay. So can you imagine, he actually got a ballot at what's that place? Duxton, a Dempsey.
Pinnacle.
The Pinnacle. He got a ballot at Pinnacle, but it was level 4, level 3 or 4. And it's politically incorrect to say. I don't know if they'll hear this lah. But so anyway, it was rejected because it was a low-level unit. Level 3. He rejected it. He rejected the ballot because it was a low unit. He feels that there can be something better. So there's always this, there can be something better, there can be something more value, there can be something cheaper, more value for money. And I think that that's the biggest trap I've seen value investors fall into. Even stock value investors. I think recently we had one person in our class who was like complaining about, like how, why you never explain about intrinsic value, etc. of crypto. It's like, if you're always searching for the best value, you will never get it. And you will never participate. You know what I'm trying to say? You just find the best you can. The thing that you feel happy about is reasonable, and then you need to go in and take action already. If not, you're always waiting and you're always unsure, because you can find the best super value one right in front of you, but you will still feel like there is something else that is better value. You will never find it. So I think that is the thing that I've observed from a lot of people who are stuck. That's my biggest grip lah, I think.
See.
Yeah.
No, I think this answers the question of why you, even though you're in traditional finance, you managed to jump into crypto. Because I realize, like, similar to you, the people who have the hardest, they cannot grasp crypto are usually the stock people or the value investors. The value investors have the most difficult time buying into and understanding crypto.
Yeah, at the end of the day, the value investors might be right. Crypto might eventually go to zero. But, I might be out before it goes to zero. And I think for me, it's about, when I think about it, when it comes to crypto, it's about human psychology and the flow of their capital. So if I think about it from this aspect, right, value investors say, I want to buy this and I want to hold it forever. For me is, I want to protect against adverse scenarios. And then the other side is, hey, I think that human psychology causes people to move and behave this way. How do I respond to it? I guess a bit of a trader mindset as well, right? In the past, people like, I think a lot of people will like tea. I think people in Europe would like to drink tea more and more, and there'll be a higher demand. Thus, I would trade my, I don't know what's from Europe, spices, wine. I'll trade my wine for tea, and I think that value investors find that hard to perceive that way, where you need to take into account human behavior, human preferences, and how the world is changing. Their religion is Warren Buffett lah, right? It needs to be backed by valuations, etc., which is fine, I guess. But Warren Buffett has a whole team of extremely intelligent people. Are you more intelligent than their stupidest person? Is the question I have.
But to be fair, I also think that Warren Buffett has changed his philosophy a bit. Like, he learned from Benjamin Graham, then he also, he upgraded his thinking. So maybe it's time for, value investors to also, transit.
Yeah, I think that no. I mean, yes, I think he upgraded or changed, but I think actually people don't really fully grasp what Warren Buffett talks about, which is he doesn't just look at a valuation of a company. He considers political landscape. He considers interest rates movements. He considers currency. Like, for example, I think a few years back, he invested a lot into Japan something. I can't remember what is it. Japanese
banks, I think. Is it?
I can't remember. Some financial company. And the reason was because of potential movements in interest rates or potential interest rates decisions. So that has nothing to do with valuation. That has to do with macro finance, right? I'm not the expert on it, but I think the issue that I see most people have is that they really think that Warren Buffett only does valuation for companies. DCF lah, multiple comparison, growth of company. It's still speculation, right? You are speculating that the company will grow forever at this certain rate. You are still speculating that the interest rate is 4% as a discount. It's still speculation, just that you are speculating on a smaller, more specific part. Whereas a crypto investor who speculates on fund movement is speculating on a big moving flow of funds. So everyone speculates when it comes to investing. It's just they speculate in different things.
Okay.
I digress lah. I can't remember what we're talking about.
Okay. I mean, it's interesting to see how your thought pattern, and even in our conversations can see that, wow, you have really quite a few interesting mental models, like how you spend your money, your risk reset methods. Yeah, wow, those are very, very insightful.
Risk reset, yeah. Okay, it's quite surprised. I thought it's quite intuitive for most people, but okay.
Okay.
Yeah.
Maybe one thing I would like to ask before we end off. Okay. Looking ahead, anything interesting up for you or in the markets? What's interesting upcoming for you?
What's interesting? We are going Niseko.
Or are we declaring it here already?
Yeah, so
What's next? What's new?
yeah, I kind of like got a high score already. So I also don't know, do I want to continue pursuing my high score, or it's more of, I think for now, to be honest, I'm just taking it day by day. It's been that way for quite long lah. And what's been really fun is that because ever since you joined CK Academy as well, for those who don't know, he's our CEO. I think number one, what's been really interesting is for me to see what's possible in the growth of a business. Very often at the start, I was cautiously skeptical about what you mentioned, but seeing it being done kind of reignites in my mind and my heart what is possible. And I guess in the next stage is a curiosity to see how it plays out. How does the academy evolve and change and grow? And how does maybe different projects that we're going to go on, how will it evolve and grow? I think that kind of makes me interested for the future. For crypto investing, I mean, I think I'm kind of there. Not much change. I am not really seeking very much for the next moonshot. If it comes, I think I'll be able to sense it and maybe get on board. But really, after 8 years, 10 years in the space, making X amount of portfolio growth, it also gets boring for me. I always tell my wife I have ADHD. Like, this game I play, yeah, it's not 100 million, but 10 million, good enough for me. I want to change game. So it's just kind of like that in my life. And it's kind of like that, I guess, in the next stage as well. I've set the safe point. Let's see, portfolio will leave it be, focus on it, adjust it, but it's not as fun as it was in 2016, 2017. But that's for me, because I've been in it 10 years, right? For the newcomers, they love it. They still feel very excited about it. But for me, I'll be like, okay, I kind of mastered this game. Let's see what it's like here, right? Business. And of course, when we talk about one of the goals we have is that if the team achieves ABCDE, we will all celebrate together. And one thing I thought was really fun was snowboarding. I actually only learned about it and picked it up when I'm late 30s. And I'm a total beginner at it. But that feeling of going, as for Singaporean, going to a place that's filled with snow, like sliding down the slopes, going to a hot spring, experiencing the culture of a different country, being with friends, that feeling and emotion is addictive, and I thought the team should experience it as well. And that experience, I think it changes you a little bit, because it makes you see, hey, you know what? There's more to life than chasing your condos and your landed property. And honestly, you only have a limited time frame. I always say that when you do snowboarding, right, it's the epitome of flexing. Because you cannot just have material wealth, though you do need material wealth, right? You need to be able to pay to fly there, pay to rent the boat, stay at the hotel, etc. But on top of that, you need to have your health as well. You need to have fitness to be able to snowboard. And on top of that, you need to have time as well. Can you take time away from work to travel there? And on top of that, you need to have social wealth as well, which is you are surrounded by friends, experiencing it together and creating memories together. So for me, snowboarding trip with colleagues or friends is kind of like the epitome of wealth flexing, much more than a Rolex watch, in my opinion. So I think maybe the latter part of my life is to experience and to see how business grows and changes and evolve. And the second is to chase and secure memories and experience for my life. And of course, third is to family, see my children grow up, etc. So I guess that's what's the next few parts or the next portions.
Nice. Wow, so there's a lot of interesting new things to look forward to. So do keep us updated with your photos. Looking forward to it. And also for all of y'all who are listening in, if you all enjoyed the session, do let us know in the comments below. This is Chris Long once again from CryptoKnight Academy. And if there's any other guests that you would like us to bring on, or if you really just enjoyed this podcast very much in general, do help us subscribe, follow us as well, and do type in the comments who you'd like us to bring on next. All right, cheers.